Hi, Mark Dupuis from Simple Acquisitions, here today to put the finishing touches on our analysis of the 36-unit complex from Kernersville, North Carolina. This is the final video in our in-depth analysis series. If you want to see the video of the PAR exercise, which is our preliminary decision point before we start getting into too much serious analysis, visit the blog page on our website at www.simpleacquisitions.com/blog. So we've done all the analysis and typed in all the data that we need at this point. Now it's really about looking at it from an overall project perspective to see if the returns are worth us getting involved.
Again, these columns compare what the owner has reported and the numbers we have found it takes to operate a complex of this size. The first few lines simply aggregate the numbers we supplied in the earlier sections to determine the NOI, capital expenditures, and the cash flow. You'll notice there's a capital expenditures allowance of $9,000. This is to build up our reserve fund so that when the roof does need to be redone, again, we won't have to go looking for the money. We plan for these things and are ready for them. When we compare the overall cash that is available from this complex on line 46, you notice that even though we will have a professional property manager in place, we still generate more cash from this complex than the current owner does, making it a very nice worry-free investment and allows us to move on to another acquisition. The next section simply shows the mortgage financing for primary and secondary debt if we had any. And finally, we get to the overall performance of this asset, the CADS, cash flow after debt service number. This is the actual cash flow after any debt service has been paid. In this case, $113,377.06 is produced on a yearly basis. The cash-on-cash return field is the percentage return on the amount of cash that is used to acquire this asset, which was $700,703 for a first-year return of 16.18%. The debt coverage ratio is the relationship that exists between the NOI and the cost of debt. So if we made $100,000 and we had $100,000 worth of mortgage payments, our ratio would be 1. Lenders like to see a ratio of 1.25. This ensures that you are not over-leveraged, and it's also important to show the financial institution that there is enough income to pay the mortgage. Cap rate. This is the actual deal cap rate, which, if you remember, represents the return based on the purchase price, not taking into account the closing costs or any additional costs that will be invested into the asset. In this case, a healthy 16.14%. And finally, the Simple Acquisitions percentage of cash flow and the equity partner's cash flow shows the equity stake in the investment and the amount of cash flow that is representative of that percentage stake. In this case, we retain a 50% equity stake, which translates into both sales being $56,688.53. And the first year COC return, equity partners, which is the projected cash-on-cash return for all partners. In this case, 8.09% for the first year only.
So what we've done to date is taken two snapshots. The first being how the complex stands at the current moment, represented by the numbers the seller has provided us. The second is how we intend to have the complex perform once we take ownership and complete all of our improvements. What it really has given us is how we can improve on the current complex's performance and what our projected returns will be once our changes are implemented. Now, as we all know, these changes won't get done overnight. It will take some time, money, and effort. If you want to see the breakdown of the changes on a monthly basis detailing how we'll transform this complex, join me on the Property Summary Series, where I demonstrate how the performance of our complex will be affected by all these changes. To close out, I hope this underwriting analysis series has given you a comfortable level on how we analyze each opportunity here at Simple Acquisitions. If you would like more information or would like to see how you can get involved in one of our opportunities, drop us a line. Our contact information, along with more details and some great educational material, can be found on our website at www.simpleacquisitions.com. Now is a great time to invest in real estate. Don't delay in making your money work harder for you. Remember, real estate doesn't have to be complicated. With simple acquisitions, it's smart, secured, and simple. I'd like to thank everyone for joining me in this series, and I hope you'll join me in our next series.